Hello, Bob. Hi, everybody. Hello, Face. Let's have a great shortened holiday week off Wednesday. Here are a few of my thoughts. Europound we talked about last week. This 88.40 or 44 level or so. We didn't close above it this day. Okay, Blake, we reversed yesterday, and today we could be closing above it. Longtime listeners know that I feel that the weekly formation is not complete. 1, 2, 3. If you want to know what 1, 2, 3 will look like when it's manifesting, something that we talked about a few times last week, USD SEC. One, two, three. Okay, so the dollar's coming back. Okay, and either believe, and you know, I was skeptical above this top because we didn't take out the stops. Okay, but if you believe this is a top, you have to fade this dollar rally. Otherwise, if we're going to get through 95.50, we may make a big move towards 97. For now, I'm going to give the benefit of the doubt to what happened on Friday. It was a pretty impressive slide, you know, although it happened behind our backs from the Europeans. So Dixie should run into trouble between right around here, 95. Some retracements. Just a double top bothers me a little bit, but you have to make up your mind and say, you know, are you going with this as being a top? And if you are, you're getting the opportunity here in the next couple of days to sell dollar strength, buy euro weakness, maybe 116. I've seen people looking for all the way down to here, but not make new lows. So you're getting fib retracements here. Otherwise, you know, we're going to negate this little 3 drive formation here. Okay, S&Ps need to make a stand here. If there's a chance for one more rally back towards 27.5, which is what I'm waiting for. Covered a lot of my positions this day, missed the recommit Friday, and now trying to get rid of old habits of regretting that I missed something. But when you do, when you take partial profits, let me tell you something, guys. This is an emotion. I tweeted about it, and the only reason I can tweet about it is because I have felt it too. Tell me, guys, if you feel this way, that anytime you're right in the market, you always feel like you don't have enough on. And every time you're wrong in the market, you feel like you always had too much on. Anyone in here feel like that? Well, you're always going to feel like that, okay? So you need to delete that. Don't let things like that steal your satisfaction from having a good trade. You know, and I'm not saying this for performance. Yeah, I'm not saying this for performance. I'm saying this for you guys to save your health. Okay, so if you're always going to be miserable when things are good and go into fetal positions when things are bad, when are you getting anything positive out of it? So you guys want to save your health, and eliminating that kind of programming that we all have de-stresses you. And, you know, just say, look, I'm not perfect. There's always another trade. I miss trades. There's times I don't know. There are times I am wrong. Just accept all those things and not beat yourself up, even when you're making money. You know, if you're going to beat yourself up when you're making money, why even do this, right? Who's with me on that? So eliminate that. I do think there's a shot for a turn in the metals this week. I don't know how long. Oh, Greg is going to be with us here today. So I've been talking about 1580 silver for a long time. You know, even when it looked like it wasn't going to happen, I always thought we were going to take out this low, you know, but it did all this before it happened. We're sitting right on this line. I'm looking for about 1580. So on the 4-hour, if we get one more slam in silver, we'll have divergence, and we should have one more low in gold, because this RSI on the low that we made last week was under 30. So I would love to see one more new low, and we're approaching all those long-term trend lines that Blake showed last week. So if we, sell off one more time to 44, and this will be your market tell. I shared this with traders I work with on Saturday. The reason I think there's a chance is, I'm a believer in gold shares leading. And I think there's a chance this week that if metals flush, they're not that far away from it, that things like, here's a blue chip ETF GDX. Okay, it was a pretty powerful rally on Friday. So the setup would be for gold to make a new low. Everyone with me? And the gold shares to put in a higher low. So gold goes to new lows. I don't think this will go to new lows. This was a pretty nice wedge it's broken out of. So that'll be something for you to look at. You could look at GDX. Those are the senior miners. You could look at Nugget, which are the junior miners ETF. But right away, initially, it looks like they're going to the blue chip ones. Okay, they had the biggest percentage up day. And I just have one more. I think this is really the most important trade, or the most important thing for you to do. We have a major breakout, a gap higher opening happening tomorrow here at ForexAnalytix. And you need to get long today, because I'm telling you, we're going to gap higher tomorrow and not look back. So, the window of opportunity is closing in, and your head's out the window. So get long ForexAnalytix today, because it's over after today. And you can see
we extended the prices, the discount for until today, because we had so many requests come in last night. It was silly. So
that's what I'm saying. It ends today.
Yeah, right. I was supposed to end last night, but
oh, I see. Okay.
Yeah, we got so many requests. We just pushed it off just a couple hours, or till the end of today. So it was just, it was like really like burdening.
You might get a Nobel Peace Prize for that.
Yeah, I don't know about that. How you doing this morning, Coach?
Good, buddy. Good. Monday mornings are rough. I have like 6 alarms set. But I got up on the first one, so I'm running around the house all morning, turning off backup alarms.
That's great. That's good. That's good. Well, let's talk about pretty important developments that happen over the weekend regarding the markets. First of all, I mean, President Trump trying to knock down crude oil, huh?
Yeah, and then they tried to walk it back, I guess.
Yeah, and I mean, crude, rallied all the way back to break even. It is still down a little bit right now as a result, but really, that move has it allowed for a bounce in the dollar Canadian, which I happen to be long, like right around these prices. Here, you know what? I'll take over this morning, or I'll take over right now. Excuse me.
Okay.
Give me a second. Where am I at? There we go. All right. So yeah, I picked up the dollar Canadian on Friday. I bought it at 132 as I wanted to buy it at 132, and the reason why I wanted to buy at 132 was this breakout point.
Yeah.
Excuse me, like right over here, and then but it enacted a double top. I picked up a little bit more down at 30, which is like 37 or so. So my average was 77, and I got out of it last night at 71. And I closed the pattern in play too, because I look at the dollar Canadian, and even though we completed the double top and we're bouncing, I am still a little nervous that the dollar Canadian could actually still have a little bit more downside before we see some upside. So I am looking for a little bit further dip. I think we're going to take out the support here at 31.
Yeah.
130, 130, and then I'm going to be a buyer. So I believe that we're doing this, and then I want to be a buyer. So I just kind of got out of the way, got out of my position, moved aside, and I'm allowing, I'm allowing for some further downside here, right? Because crude looks still really strong, despite we may be trying to peak up here, but I still think crude can reach a little further towards 75, 76 bucks, and if that happens, then that's obviously could weigh on the Canadian currency. Well, the dollar Canadian could still come down. The Canadian could go higher as a result, if that's the case.
They're starting to fade Trump's tweets. For a long time, his tweets would have staying power in the market. And I think it was last week there was something that went on to lift equities that came from him, and the same day it failed. And now you're looking at crude where we're down $1.50, and here we are unchanged. So I think some of his tweets are losing market impact.
Yeah, it could be. Eventually people grow numb to, rhetoric. And I don't know. The one thing that's different about Trump's rhetoric is he does something about it. So, which I have to hand it to him. If he could change his mind really quickly too. That's obvious, but he if he really gets on a tangent and he is dead set on something, he can really push the envelope. So there's one thing that there's actually a few things I want to talk about. The Mexican election, and I'm so irritated at myself. I went to the gym last night, and I knew AMLO was going to win. I knew it was going to win. It was more of how big of a margin he was going to win. So how he shapes his, I guess you can call it populist government. But and AMLO, I know a lot of people. We have one of our traders in the ForexAnalytix chat room who actually moved his family from Mexico a month ago or 3 weeks ago. His name's Oliver, and he moved his family to Europe, and he was a dive instructor.
Oh yeah, I know him.
Yeah, he moved his family to, I think, Portugal.
Because he was worried about the political situation?
Yeah, he's like really feels that it's unsafe for him and his family, but anyway, and he was warning us about the incoming president, and anyway, I bought the U.S. dollar Mexican peso last night at the gym. I bought it at like 1969 or something like that, and I sold it before I went to bed at 1977, like right around here. So I picked it up, I sold it, and I was gonna just put in a really deep stop, and I'm like, I don't know if I really want to hang on to it, while I'm sleeping. Who knows what's going to happen, once they count votes and everything else. Anyway, you can see the peso's a lot stronger, or the dollar Mexican peso is a lot stronger this morning. So I'm kind of a little upset with myself that I didn't just stick to my plan. But
Blake, sorry to interrupt.
Yeah.
Hi everybody. Sorry,
Hey,
just want to add something to that. It's I was reading about the election results, and it kind of struck me that we're seeing not history, but we're seeing a pattern here. There's another now leftist government promising all sorts of things. I think their main calls were that we're gonna get rid of corruption, we're gonna get rid of poverty, we're gonna get rid of drugs. All very nice, but how exactly do you do all that, And,
right.
Like a Venezuelan type guy. What was the name of the guy before, who naturalized the oil and everything? in Venezuela that took them down the toilet.
Before Maduro, yeah, Chavez.
Yeah. So he's like a Chavez, this guy?
Well, I don't know.
He's,
From what
he's
he's talking.
man of the people, you know, and promises a lot. But the question is, like, you know, Stelios says, like, how are you going to get there? You know,
Trump and him are really going to get along. They have
there are a lot of
polarities.
There are a lot of parallels, believe it or not.
Man of the people is probably one of the phrases that you have to start running away very, very fast once you hear it.
Yeah.
Well,
I mean,
you know what time it is for me, Steve. I'm running somewhere right now.
Oh yeah, commodity kidneys, yes.
So anyway, I mean, I frankly don't know what to do with the peso right at this stage in the game. You know, since I felt like I missed the mark last night. I left a lot on the table, and it wasn't a huge position either. But it's like I don't even know what to do with the peso. It's a little messy at this point as far as the charts go. But you know, picking up, you know, obviously last night was the right thing to do after the election. You know, once everything's been tallied, you know, the peso is significantly weaker. We've seen a lot of really key moves this morning, I think. One of them being the Kiwi dollar. The Kiwi we just hit 161% extension of this last move. But one thing about the Kiwi is we are below this multi-year trend line, and they tried to rally the Kiwi late on Friday back into the 80s, and it has slumped again. And that's you know, if you're long the Kiwi, it's a little, you know, little nervous being long the Kiwi here. I'm not trading the Kiwi at the moment, but I'd say if you're long the New Zealand dollar, it's, you know, you got to be very, very careful about where we're currently at. Another big rejection was in the cable. The cable, we have this big descending wedge. I thought I'd wake up this morning, frankly, and I thought the cable would be above 132 right now, but it's not. It's actually weaker. The dollar is obviously stronger on many fronts. The euro dollar also is just kind of you know, bouncing around in this range. The Aussie is weaker. A lot of this you know, worry about trade and China and retaliation. It's weakening the Aussie. Now, the chart that I want to bring to your attention is something that I just sent out via ForexAnalytix. So if you look at the analysis, basic technical analysis for the dollar yen right here, and you go over to the daily 2 chart, and this is a chart of the Nikkei. Okay, this is the Nikkei, and that's a double top, as you guys might be able to notice. Double top, Nikkei is actually breaking down, right? Now, this is the dollar yen currently, as you might be able to see it. Okay, you have a breakdown in the Nikkei. The dollar yen it's up towards the, you know, not far from the 111 highs. My opinion is the dollar yen should probably be a lot closer to 110 than where it's at right now at this, you know, 110.70 level. So with the dollar yen, I think the risk is that it moves lower here as we have a typically very strong correlation with the Nikkei. So as you can see, you know, this is a good example of what had happened a few months ago. The Nikkei wasn't, or excuse me, the dollar yen wasn't following the Nikkei higher, right? The Nikkei was moving higher. So as the Nikkei rolled over, the dollar yen rolled over. Same type of situation. We have the dollar yen, or excuse me, the Nikkei breaking down here. Okay, this dollar yen may break down eventually too. So I think that this is a very important chart, and it's something that and I shorted the dollar yen just a little while ago because the risk is manageable from here. I mean, if you look at the dollar yen, you know, we're just, you know, pushing up against resistance. We did maybe even a false breakout above the 111 level today, And you know, the risk is if we break back below 110.50, somewhere down here, you're probably going to see some selling in the dollar yen. All right, so I think it's a chart that you should be paying really close attention to, especially knowing that risk appetite is not doing too well right now. Stocks are trading heavy. You can clearly see on the S&P, it looks like we might be actually heading down towards the 200-day moving average, which comes in at 26.75 or 27.04 right now. So if S&P continues to roll over, the dollar yen might continue lower as well. So I think that's a chart that you should be paying pretty close attention to right now. Is what's happening with the dollar yen, what's happening with risk appetite. One of the things that I think is really surprising, as Dale brought up a little earlier, is that is gold and silver are weak, and gold is approaching really key trendline support here. But I think we're in this down channel, having a difficult time. We need to really start breaking new highs to turn the tide for gold, meaning we have to break recent highs. We have to break above 1256, which was the highs on Friday, I believe. And then silver, same type of thing. Silver's at trendline support, but silver really needs to get back above like 1620 to really turn things higher there. But if stocks weaken and the yen starts to strengthen, that could be a catalyst that drives the gold market higher, or precious metals, because yen and precious metals tend to have a very strong correlation. So in other words, if the dollar yen falls, gold and silver may strengthen as a result, and a lot of that has to do with risk aversion if we see it. What else did I want to talk about today really quick before I pass it over to Steve? Everything, and I don't want to talk about all the crosses because I want to leave that for Steve. And the dollar index is very, very, very sideways right now. I guess the one thing I should mention, it is probably going to be a fairly slow day today and tomorrow, and obviously on Wednesday, because Wednesday we have the 4th of July weekend, as it's observed here in the United States. So, and by the way, if you're a ForexAnalytix subscriber, analysis will be very limited on Thursday, on Wednesday. We'll resume in full on Thursday, and Dale will not have the face webinar on Wednesday, because that is 4th of July observed here, which is Independence Day for us here in the United States. So just to let you guys know. Last but not least, Steve, are you there?
Hey mate, I'm here. Yes.
Hey. Thank you for agreeing, and Stellas too, for agreeing to leave the door open for the remainder of the day here. Yes. for lower prices, because we got bombarded with support yesterday and actually Saturday too, with people trying to scramble to get in with the pricing increase. We are increasing our prices for ForexAnalytix. It will be at the end of business today, correct? And
yes, that is correct. We're going to actually switch prices early tomorrow morning European hours. So for Americans, in essence, tonight. That's the last day. Yeah, and for Europeans, only if they wake up very early in the morning, they will be able to capture the old prices. And they have one more thing to announce. As you very well know, Blake, we are about to hit a very important milestone having to do with subscribers. And we want to offer, I don't want to say a specific number, obviously, but since we are about to hit that milestone very, very shortly, we are going to offer the person that's going to hit that milestone, and we can announce his first name tomorrow, and perhaps the initial of his last name, and we're going to email him 3 months of free subscription. So, to celebrate hitting a big milestone.
Okay, great.
Cedric
awesome.
is asking, can you speak on the membership? So you want to give just a quick rundown on the website, Steve, and so people have an idea of what they maybe there's some new people in here today.
Blake, you're already there. Why don't you go over it before you pass it to me?
I'm sorry, what was the question?
If they want to have a look at what we offer at our platform, actually, and with a little bit of an explanation.
First and foremost, if you want a really good explanation of what we do, you can click on this this video right here that takes you over to our promotional video, which will show you everything and all the features that we have. Okay. But basically, ForexAnalytix is many instruments. Let me get rid of that here, that show several different types of analysis, whether it's macro, candlestick, basic technical analysis, harmonic, Elliott wave analysis, and you can easily go through and see what the bias is for each individual type of analysis. And then what we like to do, at least myself, is I like to go through and read all the different analysis from the different time frames. We keep a lot of the previous analysis on there, so you can go back and see what we had said throughout the course of the week. We readjust it all at the end of the week, and then also, I like to see if for example, the US dollar Canadian, you can see all the analysis is kind of matched up in one direction. That might give me a heads up to which way I should be thinking about the dollar Canadian, near term. We have active patterns in play. This is what we identify as possible textbook type of trade setups. What the theoretical targets and validation points would be. You can see how they've performed over the years, and you can see what the average pips that were made, and you can go through them all. You can actually go through all 24 pages that we have of these and what we've done over the years. And also we have this wonderful well, the rest of the platform is as far as live stream, calendar, history update, alert update, Twitter integration with you can completely customize this. Articles that you can read that we thought you might find valuable, and then also our ForexAnalytix community, which this is, you can see there's 80 of us in there right now. And this is traders. A lot of these traders I've been communicating with for 20 plus years, and or 20 plus years. Did I just say that? I meant like 10 plus years. Some of them up to about 15 years that we've been chatting in the same rooms together. And so you can really be part of this community of very active traders, which is wonderful. This is where I'm at all day long when I'm not here. So when I'm not on this webinar, and a lot of really sharp individuals that, like I said, I have a lot of respect for many of the traders in here that I've known for so many years. So a lot of sharp guys and gals, and we even have Amanda, who is there's the Kung Fu Panda. That's funny. We have Amanda Sweeney, who's one of our staff, and she's an awesome day trader. She's in here as well. So anyway, that is just a brief overview of ForexAnalytix, and hope that you guys all become part of this community, because we've worked really hard to build this for you all. And then also, once you do that, make sure that you download the mobile applications, which are on iOS and Android, so you can have all of these alerts and everything right on your mobile device, especially when you're out running around, which I know for me is great. If especially in Asian trade, for me, just because I live here in North America, because I'm, that's the only time that I might not be in front of the computer. I might be running around in Asia, and then some of these support and resistance levels get tripped, and then, I get notified on my phone, and a lot of times they're in crazy hours in Asia, but then I know the market's really moving, and then I can jump over to the chat room and figure out what's going on, and people like to clue me in on what has just happened. And last but not least, make sure you guys support our webinar sponsor, Forest Park FX. If you need to, if you're struggling with your broker, you're not really happy with who you're using, or you want to get ForexAnalytix for basically free. You can join the reimbursement program if you do not live in the United States, if you live in Europe or in Asia or anywhere else. And then if you're US based and you're just not happy with your broker, make sure you click right here where it says, for additional questions about the program, email us at brokers@ForexAnalytix or contact our Skype account, and they will be there. Forest Park FX will be there to help you out. So that's pretty much it, guys. I'm going to turn it over to Steve and Dale. Make sure you get your price today, because like Steve mentioned, today,
yes, Dale.
after today, it's over.
Yep.
Yes, Dale, this is your chance to subscribe, Dale.
Okay.
All right.
Can I get a refund on my trial?
Okay, done. I'll mail it back to you.
All right, guys.
All right.
As
Good luck,
everyone knows,
everybody.
I think this is the best team on the net for coverage of all the instruments we cover. So, Steve, before you get going, just selfishly, I'm wondering how if you could show the gold-silver ratio chart to see
Absolutely.
how it's
By the
holding
way,
up recently. Yeah.
let me reiterate here that Greg is going to be with us in 10 minutes.
Oh, cool.
He was a little bit busy last week, so it wasn't easy for him to make it, and he wanted to make up by coming Monday and giving us his usual Elliott wave update. So I'm looking forward to that. Now you asked about the gold-silver ratio. Let's go ahead. And there it is. There it is. A nice bounce as you see from support, right?
It held.
Yeah. Huh. You see, that's why I'm always insisting that we shouldn't be jumping the gun and wait for confirmation, right?
Yeah.
Because first of all, let's admit to something. This is one more confirmation that this trend line is actually important to the market, right?
Yeah, I'd say so.
So look at it from a positive perspective. We have one more confirmation that this is a critical trend line, and once it breaks, you should really take advantage of that, because I think that there's going to be a lot of follow through.
Yeah.
Now, so far we are seeing
76 would do it after this bounce.
Depends how much time passes, because the more the time passes, since it's an ascending trend line, obviously it comes at a higher level. So this is something to monitor. Now, since you wanted me to start from that, I think it's a good opportunity to talk about metals in general, because palladium is consolidating exactly on top of a very, very important trend line. As you very well see, this does not look like a reversal kind of a consolidation. Usually consolidations are continuation formations. So to be very honest, that doesn't look like it's going to hold. It has been holding for several days so far, which proves that this trend line is important. But on the other hand, it really doesn't look very likely that it's going to keep on holding, for much longer. And platinum has broken down completely, accelerating to the downside, and trying to make it to the next target, which is the 127% extension of the last recovery higher, which comes at 831, right? So platinum looks very bearish. You can see also the RSI broke down, and on the other hand, silver retested the 1610 area as resistance and is now pushing towards the next area of support, which comes at around 1570, 1575. We've already broken down from this big trend line support. Now it's only left. What is only left is this horizontal, area of support. So silver doesn't look healthy or good at all. As well, gold is also consolidating near this descending channel trend line support, and a little bit lower. Blake has been showing this. We can find an ascending trend line, which is quite critical, because below that there is not much. Actually, let's say there is more or less a confluence roughly at 1237, 1240. A break below that, targets much lower levels towards the 1200 area actually. So gold is not breaking down completely yet, but it's not far away from that point either. Copper tested earlier today this critical support at 294. It's rebounding somewhat now, but obviously the move lower has been already quite impressive. So let's see if this can hold. Bottom line, metals are either breaking down or are actually on the precipice of breaking down, and that's something we have to definitely acknowledge here, right? Of course, it's Monday. Liquidity is quite thin. I can also see this from the attendance we have in the chat room and the attendance we have on the webinar, which is to be expected because it's already July. We had a weekend. 4th of July is coming in 3 days, and a lot of people found this as a good opportunity, to take, some an extended weekend vacation, let's say. So this is not a big surprise, but regardless, we have to keep a close eye to that and respect it. Now, having to do with some major pairs, because I think we've had some nice developments here, and I'm sure that Greg is also going to talk about it very shortly. What I'm monitoring here closely is a descending wedge in the cable. Now, I can't be 100% sure, obviously, if we're going to move higher from here, or perhaps we're going to move a little bit lower towards the 130 area, because I've marked this as a strong area of support and then rebound higher. But I am monitoring this as a descending wedge, especially given the strong move lower that we've had and the almost complete lack of any decent rebound. I am very, very closely monitoring this descending. Actually, I would like to be buying sooner rather than later the cable here. I'm also monitoring this triangular formation here in the Euro USD. Now this can actually break down to the downside and give us one more low before higher, right? But regardless, if we do break from the trend line resistance, that might be it. Actually, we might be seeing a stronger rebound from this area. On the other hand, I have to also acknowledge here that we've had some major candles so far on the daily charts, both for Aussie and Kiwi. We had a very nice rebound from the 127% extension, which was our next target after breaking down below this bear flag on Friday. And so far today, we're seeing a bearish engulfing. And on Kiwi, the situation is the same. Another bearish engulfing, even stronger one actually. Kiwi has actually more or less now confirmed that it's breaking lower. The next target is at 66 cents. Why? This is the 127% extension of this move higher. Let me mark it. This move higher. So 127% extension here at 66 cents. And we also have a nice confluence of supports at 65 cents, just above 65 cents. Why? This is the 141.4 of this same move higher, and at the same time, it's the pennant's target from this move lower. So this move lower, the first leg down will equal the second leg down at this exact level, at the 65 cents area. So I think that Kiwi still looks quite bearish, still looks like it has more room to move to the downside. And I think that if today's daily closes do confirm the very bearish candles we're seeing so far, we're going to be hitting those next targets I mentioned. Now, I've been talking about it for a long time, and Blake mentioned it just before, so I'm not going to stay more with it. The fact we had been saying that there's nothing to do with Nikkei as long as it's trapped in a range. What was the range? 22 to 23,000. If we do confirm a close below the 22,000 area today, you can be looking for 21,000. And why 21,000? Because simply that's the extension, the 100% extension of the range, right? Obviously, that should end up having some bearish implications for the USD yen as well, despite it holding still pretty nicely, considering how risk assets have been moving and the general risk appetite, right? Now, NASDAQ on its way to our next target as well, this ascending trend line. IWM, same deal. FTSE gapped down today, trying to recover. As I said, it looks less bearish than other indices, so I would go, with trying my luck elsewhere. And DAX once again holding this ascending trend line support. I think this is quite critical. It also coincides with this horizontal area of support at 12,100. I think that the risk reward does not favor being short at current levels unless we manage to actually break through that confluence of supports. But I'm looking forward to also, we've hit the target of this double top, right? So this is another thing to consider. Not only this is a confluence of supports, but also the index has now fulfilled the target of the double top. So that makes me a little bit more skeptical. I want to also see what Gregor thinks about it. He's going to be with us in a minute now. I think that covers the indices as well. Now, let me go through some questions and have a look at what you guys and girls want us to talk about. You see. Nikki, it's not okay, says Joey. Yeah. Thanks for showing the face website, says Ed to Blake. Thank you, Cedric. USD yuan, yeah, absolutely. Actually, that's a very, very good question. USD yuan was, where is it? Where is it? There it is. Okay, USD yuan was actually showing some intention of pulling back after we got, some better news having to do with potentially the trade war last week, and it was also, testing a very important resistance here. But after like a couple of days of more or less consolidating, it's shooting higher once again today. So now, as you see, things have started looking very, very differently, right? Because initially we were correctly expecting some kind of a move higher, but to be very honest, I was looking for a corrective move higher. The fact that actually after some point, which USD yuan was correcting higher in a very, very well-behaved manner. I mean, we were just trading slowly higher within an ascending channel, and then what happens? The pair just shoots higher. I mean, this is, let me see, 2, 4, 6, 8, 10, 11, 12. So this is like the second day higher within 13 days, right? And with only one day of just not doing anything. So like 13 consecutive days, we've seen a move higher being relentless. And now the fact that we've broken above this ascending channel and we are actually ascending in a parabolic fashion changes somewhat what we should expect from here. I mean, I'm not at all sure that this is a corrective move higher and that perhaps we didn't complete a correction lower and this is another leg to the upside. So, this is a game-changing move to the upside. I actually tried my luck being short here, a very small position the other day. And, when I saw that actually the pair was unable to even like move lower just for a couple of days, I just closed with my position with like 0.24, I think, % of a loss, because sometimes you don't need to actually hit your initial target or your initial stop loss, because my stop loss was actually quite high and I intended to actually add higher as well. But structure does matter, and the fact that, as I said initially, I said, okay, I'm going to put a position here, I'm going to put a part of a position here, and I'm going to add lower or I'm going to add higher if we reluctantly move a little bit higher. But the fact that we didn't even manage to pull back at all was very, very, very telling. Sometimes, you have an initial plan and then price action tells you that, perhaps this is not what's about to happen. And, as you see, today's candle is just amazing, given the fact that this is like the 13th consecutive day that the index, that the pair doesn't move lower, even like 0.1%. The next area of resistance I have actually marked here is the 671. It was previous resistance, previous support, as you see. Actually, I think this is the time that we also fib from the highs. as you see, 61.8 is a little bit lower than that. So 670 is also the 61.8. And at some point, we should see some kind of a pullback. But as I said, given the fact that in a parabolic fashion, we've actually shot higher, that makes me, a lot more skeptical, right? So I think that, any pullback towards the 660 area once again, can actually find buyers instead of more sellers. So I would be carefully monitoring that, and unless we break down below 660, I wouldn't be looking to fade this move anymore. I tried it once, as I said, and price action told me that there's something else happening here, and I don't like what I'm seeing here. Looking at the longer term picture, let me actually ping Gregor, because he was longer term picture, and let me show this because it's important to also have the long term view. We had like a strong move higher, we had a move lower that almost made it to the 78.6, and just look at how much time it took to go down here, and how very little time it took for us to go from 640 almost all the way to 670. So this move looks impulsive to me in the short term. Anyhow, USD yen. You also asked about USD yen. Let me show you USD yen. First of all, there are two things here in the USD yen. One, the fact that as long as we stay below this descending trend line, you can see it here, the blue one, so it's very, very clearly visible. As long as we stay below this blue descending trend line, I can't get enthusiastic about looking higher, right? I mean, it is a very, very strong and well-tested trend line resistance. It's holding so far, and I have to respect that. But on the other hand, USD yen is holding up so well during risk-off days, during dollar weakness days. It just can't go lower, right? And this really troubles me. So I have to tell you that this recent behavior from USD yen actually makes me want to buy it if I want to do something. But I can't do that as long as it trades below this trend line, which currently is even below 112. So, I would be looking to buy, but I want to see USD yen break above this confluence of resistances, call it 111.50, 111.70. And Greg is with us, by the way. So I'm going to let him take over from here before I get more enthusiastic. So, Gregor, welcome.
Hey, mate.
How have you been, mate? I hope you had a nice weekend.
Yes, I'm fine. Thank you.
Good. You want to pick up from where I was at the moment? I had a friend asking here about USD yen, and I was telling him that, there are two opposing forces to me here for USD yen. One, the fact that USD yen is remaining extremely well bid. It's very well bid, even when we have dollar moving lower, when we have risk moving lower, and still USD yen is holding nicely. But on the other hand, I have that descending trend line, which until we break above it, I can't get myself buying it. So what do you think?
Well, I think that the dollar yen is trapped in some kind of a consolidation here. And I still think that the next big leg will be to the upside. We see euro dollar breaking lower. So in general, dollar is expected to be strong. But I think the dollar yen has some difficult times because there's still 10-year US note that
is rebounding, correct?
Yes, that are moving nicely to the upside, and there is room for more upside. So I think that even here, we may either stay in consolidation or even see a next leg to be lower in impulsive fashion. So actually what I'm looking at is an ABCDE triangle, and expecting that this triangle will send prices higher into wave D to this upper side of big triangle range that I'm tracking for a while now. So still think that dollar yen will move to the upside, but probably not from here. We have seen some nice reaction lower after hitting these new highs here above June 15th. So actually there can be a temporary reversal to the downside that I'm expecting. Okay, so that's for now. Just a second. Now if we look and go to euro dollar,
I see consolidation in euro dollar. That tells me that likely we'll have. Actually, that's exactly what I'm monitoring. I was also thinking that first scenario is one more leg lower before higher, but I wouldn't exclude the possibility of breaking up, since we have some kind of a double, triple bottom. So I wouldn't exclude the possibility from a basic technical analysis perspective of breaking up, without posting a new low. But yes, I would also like to see one more low before higher.
Yes, and actually, we are always slowing down at a very important levels, and this clearly is a very important level here at 1.1550. And if we consider that this trend line has already been trying to be broken here, at important levels, important corrections are formed, and ideally this is just consolidation after this very strong breakdown that occurred actually through May and June. So I think it's just a matter of time when this bearish price action will continue. But on the other hand, there can be even deeper pullback, because fourth waves, as you know, can be different forms.
Yeah, absolutely.
So it can be also deeper. Triangles is a little bit more sideways, which is my primary view. But there's also idea that if we consider the triangle, that wave 4 can be maybe a deep ABC move to the upside. Then,
formation.
Yes, then I would watch out for this 200 period moving average right there, which is around 1.2 level, very strong psychological level as well. And it comes in very nicely here around these former swing highs when we were still in the uptrend back in August of 2017. And also I would watch out RSI, which is below 50. So actually trend is bearish. So if we go a little bit higher, then watch out for 1.19 to 1.20 level.
Okay, so Greg, from what I see here from your charts, I understand that your main thesis is now that the move lower is a first leg of a new impulse to the downside. Do I interpret that right?
Yes.
Exactly. So in essence, you're now more or less convinced that dollar strength. Yeah, the dollar strength has come to stick,
yes,
with us for some time.
Yes, and actually one important price action that confirmed that why I think that we are here in a downtrend was this sharp reaction lower. Okay, after this bounce from at the end of May, we very quickly erased those earlier gains. So since this move was not been moving impulsively to the upside, it's rather corrective. So it's just a slow pose, which can see even more ups and downs here, as I said, in potential triangle idea. But this reversal, this very faster trace back to the downside is actually confirmation that bears are really going to be stronger.
Okay. You want to show us your idea on the DXY as well? I know that probably it's going to be very, very close to a mirror from what EURUSD is showing us, but to talk about levels, etc.
Yes, actually, here clearly, as you said, we are in impulsive fashion here, moving higher into wave 1. So I'm expecting more upside, but maybe we are now just slowing down again for a triangle pattern here. There's also once more chance for a deeper wave 4 pullback. So if we see a break of this 94 level, then maybe 93 could be also very important, because it was area of the former wave 4. So watch out for lower levels, but then even lower levels should act as a support if we are seeing them tested. Okay, but sooner or later, I think that uptrend will resume. So either from here or from slightly lower levels.
Okay. But by the way, I was also showing cable that I'm seeing a descending wedge there, and given how beaten down the currency pair is, I would really, from a technical perspective, anyhow, descending and ascending wedges.
Just a second.
Yeah, mate. Okay, I guess he has a phone call or something.
I'm here.
Okay, so I was, ascending and descending wedges, especially after very strong moves, are my favorite, like reversal formations. And I do think that we have a very clearly defined descending wedge for cable. We were talking about it before, and you told me that obviously, from a basic technical perspective, this is a descending wedge. But as you very well said, from an Elliott wave perspective, that's an ending diagonal. So that's what you're monitoring as well, right?
Yes, but I think that, as you know, I was long a week or so back because of this very strong reaction to the upside. But now this current leg looks very familiar. So this failure rallies normally occurs in ending diagonals. They will trick traders, those who are bullish too soon, and those who are bearish, because you would anticipate a strong decline, but it doesn't happen. So I'm still thinking that this is a wedge to see a bounce, as you said, but probably after hitting maybe 1.3 level, it's also very important psychological level. And after all, in this fifth wave down, I don't see 5 waves yet. So I think that there can be another fake rally like last week. So watch out for retest of lower levels and then turn to the upside.
By the way, speaking of which, 130 has acted multiple times as support resistance in the past. So it's not only a nice psychological level, but the market has memory, and I think 130 is a level that we've had plenty of trades being executed in the past as well. So that can play an extra role for sure. By the way, let me interrupt you for 10 seconds because we forgot to tell people. Joe Perry is going to be on Bloomberg today. Once again, 14:30 Eastern time. So it's nice if you want to just have a look at it. I mean, he usually speaks for like 3 minutes. It's a very nice show. He's going to speak about some FX pairs today. So Gregor, what else? Something I think a lot of people want to know about metals. I mean, metals seem to be breaking down really badly. I was showing before that platinum actually has had a very bearish break. Copper is on the precipice of breaking down from a very important support level as well. Platinum is also testing a very important support level. Silver is breaking down from a triangle. Gold is approaching an ascending trend line support. So they look like they're in a very, very bad shape. So what do you think about it?
I think that the gold, after this break of this trend line connected from 2016 lows, very strong breakout, as I was looking for a temporary bounce. But since this clearly did not happen, I have to respect what the market is doing, and clearly it's declining quite aggressively. So rather than looking for deep or WXY bounce, that I was looking for a move up to, let me check, for a move up to these swings from 2013, I will stick with a triangle call right now, because after all, we have seen quite corrective move here to the upside. So maybe this was just a wave C of this triangle formation that is in progress. So with that being said, I think that there are coming lower levels, but again, not so impulsively. Watch out for maybe for a temporary pause or slowdown here around 61.8%. It was also a swing low back from July of 2017. So actually it's exactly a year back. So 1200 is definitely interesting levels, which can be retested, but then I would watch out for this bounce higher into wave E. Okay, so if we go to the daily chart, what we are tracking now, it's a 5-wave decline into wave C of D, because each leg in a triangle should be made by 3 waves, right? So I think there's room for more downside. ASI is also weakening. So I think especially when
I was showing before bearish engulfing candlesticks so far today, so they look really, really bad. I mean, I was giving downside targets for Kiwi. I think that Kiwi is targeting 66 cents as the next target, but I also see a very nice confluence of supports at 65 cents. So yeah, Kiwi doesn't look good at all. I mean, it looks poised to hit more targets, more lower targets, right?
Yes, and really think that those metals, I really think they could stay under pressure for a while here, based on the dollar view in general.
Yeah.
Yeah. So
Thank you,
Oz is
Greg.
also very interesting here. I see it in wave 4, expecting more downside. There's a trend line resistance that could be retested this week. I know that it's Monday, so quite early flows on Monday. I don't like those too much. I'm expecting another test of these Monday's levels, and then maybe reversal to the downside in the second part of the week would be nice. So I will personally watch the reaction around 7,420 up to 7,450. There was also this wave 4.
Coach, do we have an interview?
Yes.
We do have an interview. Greg, since
Yes.
we don't want to bleed in the interview, would you want to be with us again on Thursday? So after the holiday is over, etc.
Sure. I will try to join, maybe even more than just on Thursday. I will try to be around.
Okay. Perfect. So
Thank you,
looking
Greg.
forward,
Thank you.
forward
Thank you,
to
Dave.
hearing you on Thursday. Thank you, Coach. Enjoy the interview.
Okay, Jeff York, welcome back to FACE. I'm going to make you the presenter now. Looking forward to seeing your pivots. I love the way you tie in all the different time frames. So welcome back to FACE, Jeff. Appreciate you being here on a holiday week.
Show my monitor. Can you hear me, Dale?
I can hear you, buddy.
Thank you for having me. I don't know which monitor you're seeing here. Can you see any?
Yeah, I see a bunch of different charts here. Looks like S&Ps are up the second one, and
So are you seeing 8 charts on my screen?
correct.
Okay, good, great.
Okay.
Thanks for having me.
Oh, great to have you, Jeff. You owe me a Coke.
Absolutely.
That's why I had you here. So anyway, I talked about in the promo tweet that I love the way you tie different time frames together with your pivots. And I heard an interesting statement by Carter Worth, who I think is very good, one of the few guys that turn the volume up on CNBC. And I wonder what you thought about it. He was talking about support, resistance, some people call it supply demand, some people call it pivots, that they're not made with concrete, that they're more like a mattress, where you have to give it, that they move a little bit, they can give a little bit, that it's not really, that price point and that's it. If it gets through it by a few ticks or whatever, it's invalid. Do you feel the same way about your pivots?
Well, it depends on which pivot we're referring to. When it comes to yearly pivots, yeah, we have to give them a little bit of leeway because some of the charting services play funny games with the data, and sometimes they'll deduct the dividend from the price of the stock. The price of the stock normally drops when it goes ex-div anyways, but sometimes like Big Charts and some of those other companies, they'll deduct it twice. So the yearly pivots will be close, but they'll be a little bit off from charting platform to charting platform. When it comes to weekly pivots, yeah, they're more precise and more exact. But the thing that, I like Carter, and he's a good technician, but he's still, going the old school route that they teach using moving averages and drawing support and resistance lines. And in my view, we're in a computer age now. And computers really don't, and the computers really don't know a moving average or a trend line, but they do know pivots. And the reason they know pivots is because pivots are just a math calc. They're based on the previous period's high plus low plus close divided by 3. So it's a simple math calc that a computer algorithm can identify easy, support and resistance levels. And I think that's one of the reasons pivot points work so well. That's
really an interesting point, Jeff. That the algos, they don't recognize channels.
Correct.
But they can recognize where liquidity and orders come in too. So these pivots are, where there are a lot of resting orders there, aren't there?
There's a lot of resting orders there, absolutely. And if price falls really fast or gaps up really fast, the algorithms know exactly where to hit it.
Okay. All right. So show us what you think is critical. I'd like to kind of start with Bitcoin because of what happened a week or so ago when we finally took out the January low. Looked like capitulation to me when we got under, I think it was 5,900, and then recovered back above it, then went back to it. So I'm interested in what your pivot work is saying, and how would you find pivots underneath it? You'd have to go back. Is there enough data to go back to find data underneath it? Okay, go ahead.
Can you see my Bitcoin BTC USD chart? Excellent.
Got it. Yeah.
These long lines on the chart are the yearly pivot points, and these are based on Bitcoin's high-low close data from 2017. And you know, all the different wallets have different data. Last December, we noticed that, you know, between Coinbase and Bitfinex, at times there was a $2,000 or $3,000 spread. So, wow. So, you know, what I'm basing these pivots on is the data that I'm getting from Bitfinex, and the data from Coinbase might be a little bit different. That's the problem that these cryptos have, is there's no centralized exchange to where you know, the datas are all coming from. But Bitcoin this year came down below the yearly pivots. This red line here is the YP. You can see it over here. We have 2 yearly pivots here, and that's been strong resistance so far this year. So I'm thinking that Bitcoin's not going to bottom until it gets down to these yearly pivots down here, either at $4,000 or $3,000. These are the new quarterly pivots you see on the side. So that's what my charts are showing. This, if I go to this quarterly pivot and edit it real quick and show you last quarter, the high last quarter was exactly right at the quarterly P right here.
Man.
So, and the high was right at the yearly P right here. So I'm still thinking that Bitcoin may go up to the quarterly pivot up here at 70, let's call it 7,400, before it starts working its way back down to 4,700, 4,000, or 3,000. But I don't think there's a...
Your pivots look like magnets to me, Jeff.
They are magnets, and it's one of the reasons. That's one of the things that we talk about at Pivotal Pivots, is the way that price is attracted to these pivots. It is like a magnet. It's amazing.
Okay, yeah, it's very. I mean, so you really, you have maybe a set of 5 numbers or so, depending upon your time frame, that you can just sit and wait for them before you take action, and you know them in advance, which you know is great for traders.
Exactly.
Because traders have to psychologically prepare themselves for a trade, and sometimes and your best trades are things that you plan for rather than analyze on the fly. Yeah, react, impulse trading.
Correct.
So interesting way to approach the market. So what do you have for us next?
So this is Bitcoin. We're looking at the yearly pivots give us a longer term view. Okay.
Right.
I've never seen a major reversal on a commodity or a stock on a daily or weekly or monthly pivot. I've always seen the major biggest reversals at the yearly pivot. So I always like to start with the yearly view. And then if you want to go to a shorter term view, we can add the weekly pivots. The W stand for weekly, the M stands for monthly. So this week on Bitcoin, we're looking for support. It's opened the week above. This is that big spike we saw last Friday. So we're looking for support this week on the weekly P at 62.30, and we're looking for strong resistance this week at the confluence of these 2 pivots up here at 66.41 to 67.06.
Okay, and your weekly pivot there, W, is it 5-1 or S1 underneath it at 59.15? That was a low that we had a year ago, January, before we recovered.
Okay.
Isn't that, that's what it turned out to be. So that's also a weekly pivot.
That's going to be a coincidence, because this weekly pivot is actually made, or the data for this weekly pivot comes from last week's high-low close.
Okay. All right. So there's a lot of debate going on in the dollar. Euro is kind of the mirror image of the dollar. I'm real curious to see what you're showing there.
Okay. Euro dollar. I get a bad tick from Interactive Brokers here.
That's an omen. That's an omen tick, right?
But let me add another pivot point calculation to this, Camaria's. But the pivot, the euro dollar to me is at strong support here.
Right.
The high this year was at the yearly R1 pivots up here back in January and February, and then it kind of meandered around for 3 or 4 months, and then it broke down and it fell down to the yearly pivot. So we're looking for strong support here on the euro dollar at $1.1477.
Okay.
That's the yearly P. That will complete this pivot price pattern from the yearly R1 pivot back down to the yearly pivot. So we're looking for a good bounce back here, probably back up to $1.18 to $1.20. If price breaks below, closes below $1.17, then we're going to be looking in this $1.11, $1.10, $1.08 level.
Okay.
So this is key support for the euro dollar this year. A close below $1.1477 is going to open up a big can of worms below. But it could bounce back up to this this other pivot maybe later on in the year at $1.2146 if this $1.1477 level holds.
Okay, nice look, Jeff.
It looks a little bit better if I switch it over to a line chart. But yeah, the yearly pivots are working great there. And we're also watching cable here too, because cable is also testing its yearly pivot. Let me go back to a candlestick chart here. And it's currently testing its yearly pivot. The high this year was at the yearly R1 pivots, and now it's pulled back to the yearly pivot. We've noticed that 80% of the time when price gets overbought or oversold at an R1 or an S1 pivot, it likes to come back to the P, the central pivot.
Okay, where's the central pivot on the pound? At 136.87?
130.49.
Oh, okay, that's a central pivot. Okay.
That's the central pivot right here. That's the YP, correct.
Okay, so if this is support does hold, where's the resistance pivot?
Well, we think it can go back up to this Fibonacci yearly R1 pivot up here at $1.3687.
Okay, so how does fib and pivots tie in together?
Well, these are not a Fibonacci retracement. This fib pivot is actually based on a Fibonacci either a 0.618 or a 0.38 fib, but it's actually a pivot point. It's not a retracement. There are 5 popular pivot point calculations. Floor traders use classic or traditional pivots. Institutional traders like to use Tom DeMark's pivots. We've got the brokers and banks that use Woody's pivots and the Camaria pivots. And we've got the computer algorithms that like to use the Fibonacci pivots. So there are different classes of traders that use the different pivot calculations. That's why I have to use all the different calculations on my chart, and what we look for is a confluence of pivots. When we see 2 or 3 pivot point calculations close to each other, we know that that's going to be 2 or 3 times as strong of support or stronger resistance.
Love confluence, more than one reason coming together at the same level. Yeah. Okay, so nice view there. I think you have a couple more for us today.
Absolutely. Let's take
you know what? Let me be selfish.
Sure.
Let me see your pivots on the NASDAQ 100.
You got it.
Because I'm trading it. And, you know, I respect, it did respect that pivot that you had earlier in a few months ago, was coming in, what, around 6,900 or so. So, okay.
Right. We had the yearly R1 floor traders pivots up here at 7,069.84,
right.
and that presented strong resistance for the first several months of this year.
Right.
And then it came up to the Camaria and Woody's yearly R1 pivots up here at 7,300, and now it's pulled back. So if the 6,900 level fails, then we're going to be looking for 68.46, possibly back down to 65.60. But what bothers me here, Dale, is the yearly pivots down here is still open. Price hasn't hit them yet. So
that's why, you know, that's a target I have.
Exactly. So this is also a target that we have, is the 6,000 level down here. That a lot of times when price gets oversold, overbought, it likes to come back down to that central pivot. The central pivot's down here at 59.35 on the NDX. So we think that there's a risk sometime this year, may not be this week or this month, maybe it's going to be September or October, that price may come back down and test this yearly pivot.
Okay, interesting. You know, I love it when a completely different method comes up with the same number I'm looking at from a method I use. So it actually, it builds conviction for it being at least a possibility. Not that it's inevitable, but it gives me a little bit more confidence with the number. And next.
Let's do IWM.
Okay.
How about small caps?
Okay.
IWM came right up to the earlier this year, the yearly R1 pivot. Let me take this one off. We'll hide this one. The yearly R1 pivot calc and the Fibonacci R1 pivot calc was the high back in January, also the high back in March, and then we broke through it back in May, and we came right up to the yearly R2 pivot. So we're looking for a pullback now down here to 161. We're looking for a pullback from R2 back down to R1, and then possibly back up to 166. But this level here, this yearly R2 Fibonacci R3 pivots here at 170, 171 should be really strong resistance for the rest of the year.
Yeah, that was a nice exhaustion gap up there. How do your pivots handle the most volatile commodity being out there where Trump's tweeting to the Saudi should increase production? What's it saying to you about oil and energy prices, your work?
The oil loves the yearly pivots, but oil is, it's a futures contract. So we have the pivots on it can be a little bit tricky because we also have to look at because
they change the premiums between different months, or
exactly, yeah. Because we're looking at the August contract now on oil, and let me switch over here. Come on, August.
There are CFDs on oil.
Okay.
Yeah, I mean, if you wanted to eliminate the, whether or not you have a carrying charge market, or I forgot what the other one's called, where, it's leading, a backwardation. Yeah, okay. Okay.
But oil this year came up back in January, right up to the yearly R1 pivot, had a big pullback. Did it again back in back in March, and now it came up to the yearly This is a Fibonacci R3 pivot that I drew on here, but I think oil's probably going to go up to $78, $79. That's where we have the yearly R3 floor traders pivot. So we're looking for strong support down here at 69.19 on any pullback, and strong resistance up here at 78.80.
All right, nice look. Anything on to give some of the silver bulls some hope? Are we at some pivots at risk you have down here, look like?
Well, let's see here. We're testing a yearly pivot here. Let me go back to the this contract. The July contract shows a little bit more. As we can see on the July contract, the yearly pivot was strong resistance up here at 1740. So we're looking for support down here at 1570. Is going to be the next area of possible support for silver.
And gold probably looks as bad, yeah.
And on gold, actually gold's testing, getting close here to a yearly pivot at 1243, 1242 is a weekly pivot. So we're thinking that this may be a good support zone here at 1242 on gold.
Okay, there's also, so that's a very important area. A lot of people looking at trend lines, but do you know what I'd say about trend lines, Jeff?
No, I don't. But I don't
their destiny is to be broken.
I agree. And I think Peter Brandt says the same thing too about trend lines.
All of us old guys do. So anyway, Jeff, now would be a good time to show your website, and unless you wanted to maybe show another instrument. But as you can see,
what I want to do is teach you guys something here real quick. Yearly pivots are free, and many charting companies, charting services offer the pivot. So if we go to stockcharts.com, you can also get them on tradingview.com and everything. Oops, I misspelled that. I was going to show you how to set up yearly pivots to where you can check them yourself.
Okay. Nice,
so if we go to stockcharts.com, this is just one of the services, free charting companies that I use. If we type in, let's say, Goldman Sachs, GS, brings you up a chart and an ad. Let's kill that ad. And if we go down here to the overlays, we can add in pivot points. Okay. And if we add that pivot points in, and if we update the chart, These pivot points that show up on the chart are the monthly pivot points when the chart's on a daily. If we change the chart to a weekly and hit update, it shows you the yearly pivot points for the year.
And these are what kind of the different ones that you mentioned?
Actually, this company shows you 3 different ones. If you leave the pivot points here in the parameters box blank, they're the traditional pivots, floor traders pivots. If you add an F parameter, it shows you the Fibonacci pivots.
Wow.
And if you change that parameter from an F to a D, it shows you Tom DeMark's yearly pivots or monthly pivots, depending if you have it on a daily or a weekly chart.
What a pearl to share that with people. I bet a lot of people didn't know that. I didn't know that.
So yeah, so pivots are one of the great things about them is they're not proprietary, they're free, and many charting services offer them for free.
Okay. So then why do people come to you, Jeff? If they can get everything free?
Because they can.
The interpretation?
Exactly, to learn how to trade them, how to use them. Also, a lot of traders aren't quite sure which pivot calculations to use on which time of day. And also, I go through hundreds of scans a day, so I'm always looking for trade setups. And if they don't have the time to go through the scans and go through the trade setups, that's why they subscribe to
Okay, yeah, most people are lazy, aren't they? Thank God.
Yes, they are. Well, a lot of people work 2 jobs.
Yeah, I know that's true. But a lot of people just want the money just to pour into their account.
Exactly.
The work, right? I mean, I'd open one of those accounts. So there's your website.
Pivotalpivots.com, and I also sell a webinar. Very inexpensive for $49. It's 3.5 hours. As soon as you buy it, it sends you a link to download it. You can watch it as many times as you want. And it teaches you everything you need to know about pivots. Which ones are the best ones to trade, how to trade them, where to find them, how to use them.
Jeff, you're one of the great guys in the business, and
thank you, Dale.
I can tell that you always have the people on your mind and want to serve them and help them. You plant good seeds, Jeff. So I hope that the cash rains down on you for the rest of the year, or until we talk again. And thank you so much for taking the time. Almost everyone's out of town except you and me. So thank you for sharing your views with us today, Jeff, and
thank you for
talking to you, my trading warrior brother.
Thank you, Dale. Appreciate it.
Okay, everyone, that's Jeff York, and you can find him on Twitter at pivotal_pivots, and go to his website for the tutorial on how to use his stuff. Ed Schaefer is thanking you. Dan Spangler, a lot of people thanking you, Jeff. Have a great day and a great holiday.
Thank you all.
Go ahead, and I'll see everyone for Turnaround Tuesday. Good hunting, and Jeff, this is how I end it all the time. Don't just count your pips, count your blessings, and I'll see everyone mañana. Take care, Jeff. Thank you, buddy. Adios.